The most bullish chart of the day is right here in front of us, and we are looking right now at the rate at which Bitcoin is being taken off of exchanges. Now, this chart, to me, embodies exactly the moment we're in, because everybody is searching around for clues as to how long this Bitcoin and cryptocurrency bull run is going to last. And today, I'm going to be presenting to you evidence that the on-chain metrics suggest that the market is not just a little bit, but extremely healthy, and that the potential for this Bitcoin supercycle is very much still in the cards. Today, we're going to be talking about how this particular explosive Bitcoin bull run might have not even begun yet. You guys are definitely going to want to watch this one front to back, and if you guys are excited, go ahead, destroy that like button. And remember, each and every comment on this video is entered to win your very own hardware wallet. Please also remember there are scammers in the comments pretending to be me, and I'll never ask you to contact me on WhatsApp. With that said, let's dive into this particular chart and the news of the day, which is spelling out an extremely bullish spell for Bitcoin and, of course, the cryptocurrency markets as a whole. So right now we're seeing a tweet here from Bitcoin Archive, and what we see here is that Bitcoin supply has been falling for 14 months since March 2020. 5 months of falling supply in 2016 led to gains of 20x the previous all-time high. Now what you can see here is if we zoom in and I maximize this, you can see that this particular chart is showing that this falling supply of Bitcoin on exchanges, this is on exchanges, obviously Bitcoins never disappear, but they can get taken off exchanges, which essentially reduces the amount of sell pressure, real sell pressure on the market. And so as Bitcoin gets reduced from exchanges, this happened from mid-July 2016 all the way through January 2017. And then what we had was this absolutely astronomical bull run. Here I can show you once again on the small image, that was this little part right here. And then we got this astronomical rise all the way up and to the right. And now what we saw is that since January 2020, we saw the beginning of that trend again. Here, if we zoom all the way in, what you can see here is that we're actually still in this trend, that this trend of a falling Bitcoin on exchanges, the falling supply, is something that has started in early 2020 and is only continuing right now. Now that you can see the full context of this image, if you can compare these two, what you'll see is that this 5-month period doesn't even come close to how big this now 12-month period has been of falling Bitcoin in this particular run. And what that actually suggests is that this hasn't even started. The Bitcoin bull run that we're looking forward to, in theory, that really got catalyzed by a bottoming, a reversal of this trend of Bitcoin now moving back onto exchanges because, of course, the gain was so dramatic. The ability to profit from Bitcoin was so dramatic. Starting once Bitcoin started making its new all-time highs back in 2017, well, it seems like the market is much more resilient and that people are actually hodling a lot more, that they're buying coins and taking them off of the exchanges to taking them off of the market. If this trend does continue, and we do see a reversal of this at some point in May or June or maybe July, well, this might suggest that we have a bull run ahead of us, a growth period ahead of us, maybe proportional to this 5-month to 12-month, 13, 14-month. Maybe we have 2 or 3 times the size of the bull run or the length of the bull run that we had back in 2017. This particular chart may suggest a Bitcoin supercycle. And this is where on-chain metrics tell the tale that off-chain metrics, hype, FUD, FOMO, and all the media buzz could never help you see through. Looking on-chain is where you see the truth, and it helps you follow the money in a way that lets you see the truth between all of the random sides of the story. I also wanted to cover this tweet from Alex Saunders, again, Mr. Nuggets News himself. Definitely check out Alex Saunders, a great researcher in the space. He said there is no dip in adoption. And what you see here is a chart of all of the disruptive technologies of the past several decades. We see the flush toilet, running water, vacuum, refrigerator, electric power, radio, household refrigerator, color TV. Anyway, what you see is that these particular innovations have these initial sort of periods of malaise a lot here, looking at these early innovations, especially these really different ones. And I believe crypto, much like the internet, was so different that it's just having these early days where it takes a while to catch on. And so what you see is that we're just starting to see an uptick here in adoption and that there is no dip here, as demarcated by this aqua cyan line in the bottom right. and that as you see, crypto's actual disruption, its actual adoption has not even started. We're looking at the earliest days of this technology, the fact that very few people even use this technology, much less that there are killer apps and must-have use cases that everyone is touching. To think that this movement is out of gas or that things are getting a little bit late in the game, to me, is just foolish. This chart, mixed with the prior chart, makes me extremely bullish about looking down the barrel of a super cycle of adoption, either on this cycle or very shortly after. And that's why on this channel, Elio Trades is a perma bull. Of course, we have yet another flip-flop, this time out of JP Morgan, now allowing clients to invest directly into their own Bitcoin fund. Again, the irony is overwhelming. For those of you who are here in 2017, we saw Jamie Dimon, the CEO or the head of JP Morgan, essentially saying that Bitcoin is a fraud and anyone who invests in it is just buying into a Ponzi, yada, yada, yada. We all know how this story ends, which is if you can't beat them, join them. And sadly, what we did find out is that JP Morgan actually bought the dip after fudding Bitcoin publicly. So we know that the plan the whole time, at least for JP Morgan, has been to get involved and actually be a driving force or a big player in crypto. This is just how they chose to do it, which was deceptively, dishonestly, and now the cards are all out there on the table and you can't hide anymore. The irony is overwhelming, and this is yet another notch on the belt of Bitcoin winning over the bankers, winning over the entire centralized and traditional financial world. And again, deferring to the stock to flow model, we can see that Bitcoin is right on track here. Yet another tale of a parabolic Bitcoin bull run, perfectly on track to deliver its next incremental gain in what has been undisputably the most revolutionary technology to hit the financial world. But I've been really excited to get to this article, which is a Glassnode Insights article that's showing this week in OnChain Data. And so what it's trying to show here is what's going on chain. And it's not so obvious sometimes when you look at the price and you look at all the media to see what's going on chain. So this particular article goes through all the on-chain metrics and data that show you how one-sided the view of the market and its current health and trajectory truly is. So Bitcoin price continues to slide lower as on-chain signals weak hands are being shaken out and strong hands are holding strong. Imagine that, strong hands holding strong. So just this week, we had two trends. We had the peak of fees, which reached new all-time highs, and transaction on-chain fees reaching new highs is a symbol of usage of the network. Whether or not it should be that expensive is not the case. It's just showing that this is a heavily used technology, Bitcoin. Yet, the typical age of spent coins has fallen back to levels not seen since the price was below 20K, meaning that people are not spending their coins as fast, and the people that are holding coins are holding them for longer. This is a good sign. You want to see the age of spent coins go up and up and up. You want to see that most people are holding for longer. Essentially what this shows is that the age of spent coins being very low means that these are newer holders, people who just bought in and then they just sold. The real old hands aren't selling. And that's what you start to learn is that the real holders, the real old strong hands, they're the ones who are really dictating the market. They're the ones who hold the most of the network. And when they start selling, that's when you should be a little worried that maybe the party's over, at least temporarily. But for now, what you're going to see is a lot of strong hands holding and a lot of newbies and weak hands getting shaken out. Those paper lettuce hands like Tesla. But this week, we also saw both on-chain transfer volume and average transaction fees hit new all-time highs, eclipsing the peak set in December 2017. Again, now we're seeing the actual on-chain utility of Bitcoin skyrocket. This is a good sign, and it shows you that on-chain metrics are very strong. We also have the 7-day moving average of transfer volume, change adjusted, reaching new highs of over $50.9 billion settled on a daily basis. The Bitcoin network is now settling $50 billion in transactions on a daily basis. That's massive. And for context, this is about 25% higher than the previous all-time high of 2017. This shows you that the on-chain metrics are building a very, very bullish case. And what may be the most important insight here is that the older coins are not being sold, but the younger coins are. As you can see, the purple lines here are the oldest coins. And what you see here is that the coins being sold, the young coins, less than a week old, being spent have an uptick. Whereas the other types of coins, the older coins that have not been sold or have not been purchased for a while, are having a downtrend in the amount of selling going on. It essentially means that the new holders are selling and the old holders are holding. And this is very healthy because it shows you the wisdom in the market is a long-term bull trend. There's also this short-term holder SOPR metric, which has fallen to the lowest value seen during this bull market, which essentially is indicating the price or the gains at which people are selling. This indicates that the coins spent this week were at an aggregate loss relative to the prices that they last moved, meaning that people are selling at a loss out of panic. This metric provides further evidence that the short-term holders who purchase coins at higher prices have been shaken out during this correction. Shaking out the weak hands, transferring money from the impatient to the patient, and each and every chapter, the story remains the same. Deep and lengthy retraces of the SOPR metric has historically been constructive for price in a bull market, as panic sellers are exhausted and coins are transferred to stronger hands. We also have miners resuming accumulation, with certain metrics showing highs not seen since mid-2018, and this is even more impressive given that we're just after a halving. This is extremely bullish as well. Again, follow the on-chain metrics and it'll give you a very clear image of where coins are going and what the actual intention behind those coin transfers are. We also have a return back to neutral funding, which is part of the derivatives market, which shows that the market is not highly leveraged in one direction. And that means that the market's growth over the last few days has been highly organic and sustainable, and that we're not setting up a position where we can either rocket all the way down because people are leveraged long, like was the case in the 60,000s, or all the way up when they're leveraged short, like was the case in the 4,000s. You know how this works. Leverage is rocket fuel in one direction or another, and having a low leveraged gain, having a low leveraged build of the market is extremely, extremely healthy. So the market recovers with very healthy on-chain metrics that paint a clear picture that Bitcoin might be entering into yet the beginning of its true bullish momentum, with on-chain metrics suggesting that Bitcoin is still leaving exchanges and hasn't reversed this trend. And the longer this goes on, the healthier for the entire crypto market. As we saw, this was only a 5-month period for the 2017 run, whereas now it's over 12 months long, this declining Bitcoin supply on exchanges. It really leads to the question of wondering whether there will be a complete supply crisis, in which case the price per BTC might become astronomical. And that would, of course, most likely reverse the trend of Bitcoin coming off exchanges, because people would then look to cash in on what would be some gains that are so juicy that they would be hard to look away from. Regardless, that trend hasn't started yet, and that means potentially that we are at the beginning of a bull run that will last longer than the period that followed this trend in 2017. Remember, this trend began in January 2017, the actual reversal of that trend, whereas we still haven't even experienced it. And that trend in 2017 lasted 11 months. Does that mean that this particular bull cycle might last for multiple years or longer, considering we are between 2 and 3 times as long as it lasted last time? This would be absolutely astronomical. And meanwhile, the on-chain data as presented by Glassnode is undeniable, showing that this market is extremely healthy. The Bitcoin on-chain data is showing that Bitcoin is being used to settle more transactions and service more people around the world than it ever has before. And meanwhile, we have more coins in the hands of people who have a long-term bias. This is extremely, extremely bullish for the space. So as we enter into May of 2021, which many people feel like might be towards the end of this bull run, I can't help but feel like we're on the brink of really crossing the chasm into a Bitcoin super cycle that would not only bring in hundreds of millions, if not billions of users into crypto, but would most likely send Bitcoin to astronomically new highs of hundreds of thousands, maybe even close to that hallowed ground of $1 million Bitcoin. In this world, those altcoins that you're holding will most likely multiply to the tune of 10, 20, 100, maybe 1,000x some of them. And this is why the potential for building wealth and for financial freedom in crypto is unlike that of any other industry. And as you can see, the adoption cycle for crypto is still in its early days. Once it runs its course and everyone is using crypto, the opportunities simply won't be as overwhelming, won't be as easy to tap into. Things will normalize. But for now, I believe this is the opportunity of a lifetime, and I'm so excited to be sharing this news with you today. Let me know if you guys enjoyed this episode, if you got some value value out of it, go ahead, destroy that like button. Remember, each and every comment on this video is entered to win your very own hardware wallet. As always, if you want the absolute best information helping you see through the emotions, see through the FUD, the FOMO, the media spin, the manic market corrections and pumps, well then all you have to do is subscribe and put that bell notification on. And I'll be bringing you videos each and every day or close to it that help you get ahead and stay ahead of the market. So make sure you subscribe and put that bell notification on. And as always, you can follow me on Twitter at Elio Trades if you want the most up-to-the-minute updates. Thank you so much for watching, and I'll see you very soon on the next episode.